Yo! Okay, I'm not going to do that stupid little TikTok intro for you guys every single YouTube video. I hope you understand. So today isn't going to be like a vlog, like fun stuff like this. It's going to be like weekly analysis. So I just wanted to say what's good, welcome to the first video. And I am going to do vlog probably coming out on Friday. And this will kind of be how it is, you know, weekly analysis on Sunday, vlog Friday. And yeah, we'll just see how this goes, and I'll make adjustments as I see needed. But yeah, I hope you guys like this. Not going to be much of like my personality. Going to be a lot more of like how I see the charts. So hopefully you guys like that. I know a lot of you guys are coming from TikTok, so I appreciate all you guys. And yeah, I'll catch you on the charts. All right, what's good, guys? This is going to be the first weekly analysis that I give you. I've tried to film this video like 3 times, so forgive me if it's like a little bit rushed or whatever. I'm just kind of sick of doing this, and hopefully it works. I've just been having audio issues, and then also I'd love to hear like constructive criticism for this because obviously I'm new to it. This is my first YouTube video, so obviously it's going to be bad. So tell me what I'm doing wrong in the comments, please, and that would be much appreciated. All right, so this is what I'm looking at. I'm looking at the daily chart on the S&P 500. We're going to go over some weekly analysis, and then we're going to go over the 2 trades that we actually took today. And how I ended up losing one of them, and then how I ended up winning the other one and covering that loss and ended up profiting pretty big. All right, so right now we're on the weekly chart. The S&P 500 is looking bearish, okay? So high, low, obviously breaking this, so it's a lower low, lower high, lower low, lower high, going to make a lower low. That's why this is put on the chart. It's our next draw on price. It's the next draw on liquidity. Okay, and then if we look further down, we can see another draw on liquidity right here. We have our little fair value gap within there. All right, so price points that I'm looking for on the weekly would be here and then within here. All right. Okay, let's go into the daily time frame now. Okay, so what do we see here? We obviously had this as liquidity, right? But that got swept, okay? So now, next point of liquidity that we would want to target right here, and this was the weekly low that we mapped out, all right? Okay, so the daily, we have 2 fair value gaps that we can play within, okay? So there's this one, and then there's this one. And I'll give you reasoning why I don't want to use this one and why I want to use the one above, because we'll go down into smaller time frames and break it down even more, okay? But right now, daily time frame, fair value gap here, right here, and then also we have a huge one up here, okay? That could very easily get revisited within the next couple weeks, okay? So let's go into the 4-hour. Okay, so if we're looking at this right now, is this an area that price would want to draw to? Okay, I'll give you a second. Okay, here's your answer. Probably not, and here's why. Okay, so first of all, there's not really much that we can do within here, okay? We've already filled, ready, wick filled here, wick filled here. The only other fair value gap that I see that needs to be filled is right in here. And is this going to be strong? Probably not, okay? And I'll give you a reason why this one is going to be a lot stronger than this. It's because there's not much liquidity to be swept in here, okay? If we go into the 1 hour, swept liquidity this morning. We took a trade off of this, okay? Swept liquidity below here now, all right? We ended up hitting this, taking out liquidity from here. And I do see us pushing up into this fair value gap, whether it's off of this liquidity sweep or sweeping the liquidity of the weekly low that we marked out. Okay, so if we're looking at this, why is this not really a safe target for us? First of all, just if we're looking at this, where's the liquidity to be swept? What I like to use fair value gaps with is I like to see a sweep of liquidity along with it going into a fair value gap, and then I'll enter off a break of structure into another fair value gap, okay? And I'll explain a little bit more when I talk about my entry within here, okay? So right here, the only other liquidity that we would need to sweep is right here, okay? And that is fairly close to our fair value gap. But like I was saying before, I don't think we'll get much of a push down off of this, much of a relief, and I'll explain why, okay? So let's remove this because we don't really think we'll use it, okay? And if we're looking at this chart, okay, high right here, 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 and high right here. Okay? So you're probably thinking, why did I just highlight those highs? Why did I just say high, 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 high? Okay? It's because all of that liquidity was never swept. Okay? There's liquidity here, 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 and then right here, and this was swept, okay? So we have liquidity, 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 liquidity. There's so much liquidity for the market to take out, along with the confluence of having this daily fair value gap, and then when we go into the smaller time frames, I can show you a better entry on how we will be able to enter this, okay? So we see liquidity, liquidity, liquidity. Odds are market is going to end up sweeping this or sweeping this low, deviating, and then pushing up to end up taking this out, all right? So let's go into the 15-minute now, okay? This is the daily fair value gap, right? Let me get rid of this line. Okay, so this is the daily fair value gap. All right, now let's look here. We have a 15-minute fair value gap right in here, and this could very well be used as an entry, okay? And here's why. We have liquidity resting right here, all right? So we want market to push up past here, past this high, in order to take out all the liquidity that was residing in the highs below here, right? So when we take this high out, where are we going to target? Well, this fair value gap was already filled in with this high, right? So this is the next one that we're going to target, okay? Along with the daily fair value gap confluence, we also have previous support, broke, turning into resistance, right? That's not how I trade, but you can see how these retail trader strategies are coming into play, all right? So what I would like to see, either push under here, push up, and I'm very upset that all this is happening in hindsight, because I literally laid out this trade before it happened for you guys, and I'm very upset about that. I'm very upset that the audio is gone now, because I said that I wanted market to come into this fair value gap, sweep this liquidity, possibly come here, and then I'll be looking for it to push up into these areas. But you know, it's whatever. We're doing what we can with it. Okay, so on the daily time frame, let's move back. Okay, let's see. This is what I would like to see. We already had our sweep of this liquidity. We might have one more push down. Who knows? I'll wait until I see what London session does, what New York session open does. But odds are we're either going to go down under here, or we've already made the dip lower and we're going to push into this fair value gap, wick into this 15-minute fair value gap, and then end up closing within this daily fair value gap, or even closing below, okay? I will be looking to take shorts within this fair value gap. I'm not going to say like for sure, because I obviously take trades on current market conditions. I'm not just going to lay out a trade and like set a limit like this far in advance. But I'm doing this as a weekly analysis, trying to show you where price could return to, okay? And then obviously targets on this would be based off of the liquidity areas off the push-up. So the push-up, you know, like when we see like the lows and the lows printed as we make this like uptrend into this area, those will be our targets, all right? Now, if we want a more grand look at things, okay, it's not looking too hot for the S&P 500, all right? This is on the monthly chart. We see we've been bearish, okay, and that's like pretty significant for the S&P 500. I don't think I've seen the S&P 500 be bearish since, you know, 2008. Look at this, right? This is bearish market structure And since then, we've had bullish market structure, right? Like this low wasn't even broken. It was just swept, and this was COVID, right? But right now, looking at this is bearish, right? We've had a high, a lower high, a high, a lower low, lower high, lower low, lower high, going to break this low soon. Okay, so what does that say for the markets? It means don't invest yet, right? I like, as an investor, I see this, and obviously people are saying buy the panic, right? Well, yes, that is the case, but this was panic too. This was panic, right? We had a two months that were red. People were panicking. People were buying here. All right. So are we being intelligent investors, or are we being retail investors? Okay, that's what we need to ask ourselves. All right. The next areas that I would look for were obviously this fair value gap marked off, and then if we do want to go even lower than that, we can target just our basic areas of liquidity. Right here. This low, this low, this low, and so forth. We do have a fair value gap within this COVID push, right? But that's a far way for it to go. Now, I will say that the S&P 500, we've only gone down 23%, okay? And look at this. Coming down into this fair value gap, and let me say, gaps get filled. All right, this is a 43% drop from the high. All right, and people are probably saying it's probably not going to go down there. All right, well, what did we do in 2008 where we saw bearish market structure? We went down 57%. So if we're repeating the past, which the market almost always does, right? That's how we trade. We're able to see previous market patterns, and we're going to take trades based off of that. Who knows? We got to keep this fair value gap in mind. Okay. Now, let's go into my actual chart, and I can show you the trade that we took today. Or we took two trades. I won't go over the losing trade just because, or I can show you both. All right, so I'll go over the losing trade first, kind of explain why I got in, and then this was the winning trade. Okay, so this was when... Okay, I'll go just like right here, okay? This is pretty much where I started my morning. I saw a market like this, all right? And these were the levels that I had laid out, okay? So I saw that market swept this liquidity, and I was instantly in the mindset, okay, we are going down for the day because we swept buy-side liquidity already during London session, and we just printed this lower low because this low was lower than this one. However, this was my mistake, okay? I failed to recognize as this being sell-side liquidity being swept and a potential to push up and take out the London high for our actual winning trade that we ended up taking. So in my mind, I said, okay, buy-side liquidity swept, I can enter for a short once we enter into a 15-minute fair value gap within here, because we are going to target these lows, because I had these lows as my main target for the day. All right, so let's press play. Let's see what happens. Let me show you. This was the fair value gap that I was going to enter off of. Okay, and then if we go on the 5-minute, I'll actually lay out the trade that I took. Okay, so it was here. Yep, stop right there. First target was right here. Okay. We're just going to play it out. Okay, so see how we pushed up into this fair value gap, and then we get a rejection, right? Boom. Off of this 5-minute candle, this 5-minute wick break, okay, that was a break of structure on the 1 minute. All right, so I entered off of that. Saw a break of structure off of the fair value gap. Okay, I was pretty confident in this trade. All right, let's see what happens. Okay, so we came back again and rejected it again, and we went below this low on the 5 minutes. So I was almost certain that we were going to head down. But with hindsight, I should have seen this low being swept as sell-side liquidity, and for us to be looking to take out these highs. Okay, so we'll play it, see what happened to our trade. Boom, stopped out for a 1% loss. All right, now we are going to, let's just keep this going. Okay, so next thing I was looking for after that, I was like, okay, well maybe I'm done trading for the day. But also I have to keep in mind there's this 15-minute fair value gap here, and we also have buy side liquidity here that could also get swept. So let's look at the charts for a little bit longer, okay? So this is what I saw. Boom, okay? We get a push up into our fair value gap, right? Okay, now let's break it down to the 5-minute. Okay, we're into our zone that I marked out. I got the alert once it entered. I was like, okay, perfect. I'll start looking for entries. Okay, play it, boom, respected it, came down, play it again, boom. Okay, so I don't want to go to the 1 minute because it doesn't let me go to the 1 minute on bar replay, but there was a 1 minute fair value gap within here that I entered on. Okay, so price ended up coming into here. I took a short off of it. Stops were above the fair value gap, and then let's see what price did. Okay, let me remove this. And my first take profit was this low. Final was right here. Okay, and I will tell you how I managed it. Okay, so here we go. Boom. This was the push into the fair value gap that I entered off of. All right, let's play it some more, see what happens. Boom. Literally enters into the 1 minute fair value gap, dumped, okay, broke market structure after the sweep into a fair value gap, sweep of liquidity, fair value gap, break of structure into a fair value gap. That is the perfect trade entry, okay? Let's play it some more, see what happens. Dumping, 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 whatever. Okay, so take profit 1 was hit, and at this point, I took off 50% of the trade, and then I moved stops to break even. All right, that's something you guys need to learn to do, right, to conserve profits. Okay, first take profit was hit, stops moved to break even, 50% is off the table now. It's a risk-free trade. I already covered the loss that I took, because if you remember what the risk to reward ratio was on this, it was like a 1 to 2. So once this got hit, 50% off the table, that's already more than we lost in the last trade. Let's keep it playing, see what happens. Okay, push up into this fair value gap, boom, breaking down some more. Final take profit hit. I know I marked this out right there, but this is where I close all of my profit. Okay. I can put up the screenshot of my final position being closed out. I ended up closing with a large win, and that was the trade that we took today. Okay, I hope that helped you guys with first, finding like a large market view of everything like on the weekly chart, and then this also, hopefully it helped you, first of all, learning a lesson of not ignoring liquidity being swept, and then second of all, helping you find potential entries like a sweep of liquidity into a fair value gap, break of structure, back into another fair value gap. That's where you would enter, and then target liquidity below. Okay? Yep, let's exit that. And we can see now that we're breaking structure to the upside. So that's pretty cool. All right. And I'm actually going to remove all of this for today because that's something I love to do, is clearing my chart off. So tomorrow I have a fresh head, and I'm actually going to leave this weekly area on there just in case. All right, so that is the weekly analysis. I hope you guys enjoyed it. If you guys have any like constructive criticism, I would love to hear it. Anything you guys want to see. I'm starting a 100 to 1K challenge this week. I'll start it tomorrow, and the first episode of that challenge will be uploaded on Friday. It'll be like that challenge along with like a mix of like day in the life vlog type of stuff. Because I know a lot of you guys wanted to see that. I'm not really into that kind of stuff. I don't know. It's going to be like a little bit uncomfortable for me to get used to it, but I know that's what you guys want. So hopefully you guys enjoy it. Hopefully you guys like this video. It would be sweet if you guys gave me a little subscription. And yeah, if you want to know where I take all my trades, I have a Discord channel. Just head to my Instagram or my TikTok. I have the link in the bio. You guys can join there. That's where I called out the losing trade and the winning trade. I'm very transparent with all my trades. I'm not the type of trader that's going to say, yes, I win 100% of the time. No. Okay, I'm a professional day trader. Every single trader loses. If anybody says they have a 100% win rate, they're lying to you. They're trying to take your money. Okay? So that's it for today. I'll be back with another one of these like weekly chart type videos pretty soon, and then more like vlog type videos. I'll do like 2 videos a week because I know you guys wanted to see stuff from the YouTube channel. So 2 videos a week, one analysis type vid, another vid like challenge or whatever, day in the life, just fun stuff so you guys can see what I'm kind of doing, get a little look into what I do every day. So that's pretty much it for me. Peace.